Greetings everyone, you have the traveling real estate agents here today. I just wanted to take a minute and talk to you about the interest rates and what that means to you. The interest rates have dropped into the upper threes and low fours. A lot of customers right now and clients are seeing about a $30,000 increase in their buying power. A really simple rule of thumb to figure out what your payment is, because everybody wants to know what their payment means more to most than what they can afford or the amount that their loan can be for. So the way to look at it is take whatever the interest rate is, and if you add 2% to that, so say we're going to make it easy. If it was 4, if you took between 1.5% and 2% and added it on, that's going to give you what your monthly payment will be. So for example, if it's at 4% right now, for example, let's just do a $300,000 house. We add the 2 onto it, so say 6%. That's basically about $1,800 for your payment, and that would be PITI, or principal, interest, tax, and insurance. Again, it's a rule of thumb. It's not, this logarithm or whatever calculation. It works. It'll be very close. Take it to your lender, and of course, they will give you the exact amount. But if you're wondering, you walk in on an open house and you're thinking, okay, what kind of a payment are we looking at? The one variable that you're not going to know, of course, will be the taxes. And there's a few areas in the metro here that are quite a bit less expensive, and some that are quite a bit more. One of the least expensive counties is Washington County, where, for example, you could have a home that has $1,900, $2,000 taxes per year, and you take the same home and cross into, for example, Chisago County or Ramsey County, and they could be $2,500 to $2,800. And again, I don't know the exact number. That's just kind of an example of what's going on. The other to think about is when you are looking to buy a home, your financing will determine how much you have to put down. And for an example would be conventional, and there's two. There's a 3% and there's also a 5% conventional. There's also FHA, for example, would be 3.5%. So we're going to take the easier one. Let's take 5%, and again, let's use that $300,000 home. That means you need to put down $15,000. The other part to that is, and this is, I'm just trying to show you how much cash you're going to need. And again, there's some programs that will help you either with closing costs or down payment programs, but as a generality, you will need for closing costs on a $300,000 home somewhere between, say, 2.5% and 3%. So let's figure on the high side. So at 3%, that means you need $9,000. So between down payment and paying for your closing costs, you're going to need $24,000 to come to closing with, to pay towards the closing. Yes, you can ask for closing costs from the seller, but they're not free. I hear this fairly often that, well, isn't it everybody is paying closing costs? No, maybe half of them do. However, there's no free money because the seller looks at it as, what am I getting as a net offer price? So what happens is they're not willing to lower their sales price quite as much, and you're actually building those closing costs in. If you had just gone in and not asked for closing costs, you would probably have gotten a lower price. So you're essentially adding those closing costs into your price over 30 years. So if you take that number over 30 years, it's not a good deal building in your closing costs. If you absolutely have to, you have to. I guess that's it for now. Of course, you can always call us or text us or email us. We'll have the information on this video as well. Thank you from the Traveling Real Estate Agents. We've enjoyed it. It seems like everywhere we're going right now, someone's asking when our next video is coming out. This will be the next one. Thanks again and have a great day.